All right, still on the UK economy, which contracted 0.2% between April and June, its worst performance since 2012. My colleague in London, Juliana Olayinka, will break down the numbers for us and give us the perspectives in London. Hello, Juliana. Good afternoon. Good to see you again.
Good afternoon, Chimi. Nice to see you.
So all is not looking well for the UK economy, according to the GDP numbers released this morning. Which sectors got the hit most, and is there a risk that the UK might be in a technical recession?
Well, Chimi, as a technical recession is defined by two successive contractions in the quarters, we're not technically there yet. We'll have to wait to see what those numbers tell us in September. But, you know, by golly, it certainly doesn't look like we won't be in a recession, because nobody seems to be happy or at least excited about the next couple of months. This 0.2% shrinking, even though we have seen some dire figures over the past couple of months, really took people by surprise, including the Bank of England. Last week they were speaking and they said they expected Q2 to flatline, not to decrease. Lots of people have been reacting, and really, of course, Brexit is the elephant in the room, but they have been trying to look at the particular industries, and it really goes back to those poor PMI numbers in manufacturing. We've seen lots of car plants have been taken out of the UK. The stockpiling that began at the beginning of the year, as everybody continued to rush towards a March the 29th Brexit, has really bit the manufacturing makers badly, because now, of course, they have so many goods that weren't selling. The construction industry has been doing very poor, and then the service industry provides about 80% of the economy, and that's completely stagnant at the moment. So it's almost a perfect storm of the biggest industries in the UK being negative or flatlining. Sajid Javid, he's the Chancellor of the Exchequer. This is the first kind of quarterly results coming under his tenure, and he has been quite positive. He was saying today that, look, you know, the world economy is going bad. Let's look at those employment figures. We're doing better than ever before. Many people are working and the economy is going to rebound, but it's certainly worrying, and everybody, of course, is talking about it.
Anyway, how are the currencies and the equities markets reading this number?
Well, there has been a sharp reaction in the city. The FTSE All-Share is down 0.09%. The FTSE 100 is down 0.10%. The FTSE 250 is up, though, just by 0.05%. In currencies, again, terrible for sterling. The British pound is down on the US dollar by 0.36%, down on the euro by 0.55%, and down on the Japanese yen by 0.63%.
Okay, Juliana, today marks the end of the business week. So what is the outlook for next week?
Unfortunately, Chimi, in the UK, it's doom and gloom, not just the weather, but of course, these GDP numbers. And I'll repeat that because, you know, we have had some negative numbers. A lot of economists, financial analysts, Bank of England economists have been saying just how bad it is, but they're all really shocked. So as Ulrich was saying in Frankfurt there, I think once people start really crunching down the numbers, we'll get a much better picture of just how the UK economy is looking. And then, of course, the Prime Minister, Boris Johnson, he's got a lot of pressure on his back. He's given the Chancellor of the Exchequer millions, almost billions of pounds to really make us go through, not go through a disorderly Brexit, but can the UK economy afford it, especially now that the Conservative government only have a majority of one in Parliament? So I'm sorry, but the buzzword Brexit will be lingering on next week, Jimmy.
Well, let's just be optimistic and hope for the best. Now it's time to say thank God it's Friday, so I hope you enjoy the rest of the weekend, Juliana.
Thank you, Jimmy.
All right, then stocks in Asia Pacific traded mixed on Friday as Chinese data showed food inflation soared in July, while Japan's economy grew at a greater pace than expected. Mainland Chinese stocks closed lower, retracing earlier gains, with the Shanghai Composite slipping 0.71% and the Shenzhen Composite falling 1.27%. Hong Kong's Hang Seng Index slipped 0.4% as of its final hour of trading. In other parts of the region, markets advanced. Japan's Nikkei 225 gained 0.44%, while the Topix Index rose 0.35%. South Korea's Kospi advanced 0.89%, and Australia's ASX 200 rose 0.25%. And in the U.S., stock index futures were lower Friday morning as investors continued to monitor U.S.-China trade relations and movements in the bond markets. At around 4:30 a.m. Eastern Time, Dow futures fell 104 points, indicating a negative open of more than 84 points. Futures on the S&P 500 and Nasdaq were also slightly lower. Traders are also keeping a close eye on the bond market, where the recent appetite for U.S. debt has pushed a bond market recession indicator close to a warning zone. Away from the equities, the International Energy Agency says that mounting signs of an economic slowdown and a ramping up of a U.S.-China trade war have caused global oil demand to grow at its slowest pace since the financial crisis of 2008, while lowering its global demand growth forecast for 2019 and 2020 to 1.1 million and 1.3 million barrels per day. The IEA cites China as the only major source of growth at 500,000 barrels per day for the first half of this year. According to the agency, although supply curbs by the Organization of the Petroleum Exporting Countries and its allies have tightened the oil market, the balance will be temporary as it forecasts robust non-OPEC production growth in 2020 at 2.2 million barrels per day. Okay, we'll take a quick break, and then when we come back, we'll of course be talking about the first ever official listing of a tokenized security. Just stay with us.